Hey guys, Spartan here from SpartanTrading.com. Just wanted to hit you guys with another trade review. And in this video, I want to go over some just basic options trading intraday, day trading options, what I look for, some trades that I did today. Today is, by the way, February 12th, 2020. So two trades I'm going to be talking about, ALGN and NVS. And basically, I just want to go through kind of the thought process. They were very basic trades. These are kind of standard day trades that I look to do base hits in the room. They're 100% trades or 200% trades on the ALGN was at least 200 whatever percent. We'll go through that in a second. But basically, these are just base hits, cheap contracts I'm looking at with the stock to have room to the upside so that these contracts could potentially give us exponential gains based off of the delta. So I'll look at something like this ALGN midweek. Today's Wednesday, by the way, February the 12th. So you have a little bit of premium still baked into the contracts that are out of the money. And what that means is the deltas on those contracts are going to be a decent or big enough that forever. And if you guys are unfamiliar, the delta on a contract is the amount that contract will move for every single $1 increase in the underlying asset, that being the common stock of ALGN. So in this case, as the common stock on ALGN increases, it's going to increase by X amount. The contract will, based off of whatever the delta is. As the contract gets closer to the strike, the delta is going to get closer to essentially 1 until it's in the money, and then eventually the delta will become 1. And for every $1 move on the common stock, the contract's going to move $1. But that's besides the point. You can read up on that stuff. It's very basic. Anywho, ALGN, guys, basically what was happening here is I was looking at the daily chart, and this was early on in the day, and what I saw was this. Gorgeous chart, breaking the 50 EMA to the upside as well as a resistance break, and what I saw on the daily is it had a lot of room, or a decent amount of room into this resistance area up here. In this case, I was looking at around 280s for it to get to, or it had room to 280s. Doesn't mean it's going to actually get to that area, it just has room to that area, and that's all that matters. We did two things. We actually took the equity long and we took the options long at the same time. I'm just going to be going over the option side. So what I did is I looked at the contracts and I figured, okay, the 280s were cheap at the time. They were like 30 or 40 cents, 38 cents, I believe is what I grabbed them at. And based off of the delta, which ended up being like 20 cents, I figured, okay, the stock can easily go up 4 or 5 points. These contracts should at least be able to double, maybe triple, go up 200%. So basically took the contracts on the breakout, added into it almost immediately, 2 lots. I sold a little bit, so 38 cents, I sold a little bit at the 80 cent area. Let's just zoom in here a little bit. And the reason why I was selling a little bit at the 80 cent area is I saw sellers come in on the L2 as it pushed up. And you can see these long little spikes, these long bars on the chart, which means that the price went up to this area. You can see where the candles closed back below here. So they were selling as it pushed up. So I was watching that on the L2, which made me go, okay, I'm going to sell some into that push. Sold some at 80 cents. I held half the position. As the position pushed up more, intraday, I took a little bit more off when I started to see sellers coming on the L2 again, which was at the, I think, $1.30 area. Yes. I can zoom in a little bit more so you can see it. It's kind of hard to see with that high posted there. Let's do this real quick. Get rid of that high so you can actually see it. One sec, guys. Sorry about that. Cool. That should help. So you can see that, $1.30 sold the other piece. So essentially, just above 200%, whatever that is, $1.30 divided by 0.38, 100 or 240% on the trade. And the other thing that I decided was with the rest of those contracts, decided to take the equity off. We made a couple points on the equity, made 6 points-ish. We took the rest of that equity off. Decided to hold a piece of the options because even though they do expire this week, there is a decent probability that we can get into that 280 area. It closed out strong on the hourly, closed out strong on the daily. And when you get positions like that, at the end of the day, which are holding up, especially in this type of market, momentum, you tend to get continuation, so it is worth holding a piece. So I ended up swinging a quarter of this one. Let's take a look at NVS. This is an interesting situation. This is a stock that I actually had trigger an all-time high breakout, and as it triggered that all-time high breakout, I looked at the chart and I figured, okay, we got some room to the upside. or sorry, it didn't trigger an all-time high breakout. It triggered a range break to the upside. That makes more sense. So I had an alert set on the range break area, and as it broke out on the daily, I brought up the chart immediately, and in chat, I right away said, okay guys, go after the 100 calls. They're really cheap. This thing could easily get into the $100 level. Basically, the resistance was 99.20, and then after 99.20 was about a 101.80. And the contracts at the time were, I believe, 35 or 40 cents. And you can see we went in basically right when that pop started to occur. We grabbed, I grabbed actually a whole bunch of them. So I grabbed a bunch at 40 cents, grabbed a bunch at 35 cents, added into the position pretty heavy. And then as it pushed up, you could see the sellers again come in on the L2. And as that occurred, I was just, selling into that push. So sold a whole bunch into the 80 cent area from, 40 and 35 cents. My average is, I believe, like 0.38 something. But anywho, sold a bunch into the push. And the reason why I took off half the position at 80 cents was essentially that contract, which is a February 21st. We could easily swing this now at no risk because we've locked in half of the position at 100%. There's no reason to not want to swing that position. It's almost a free trade, so to speak. The contract could go to zero, and I could still walk away with money on the position because we sold it a little bit above the average, right? 50% a little bit above the average. So the whole idea here was basically get in on the cheap contracts that could possibly get in the money. In this case, there were the hundreds. As it started to push, we saw a little bit of topping and selling on the L2, which triggers me to go, okay, I'm going to start to sell the contracts. I don't wait for confirmation or anything like that. Once I see sellers on the L2, if you're trading weekly contracts on the option side, you want to start exiting. And then obviously it pulled back to EMA support. It held up by the end of the day. Wanted to swing it because these are February 21s. We got a week and change to hold this contract. Could it easily get into the $100 level? Absolutely. So that was the whole idea behind that. So that's a good example of a intraday trade on Navaris, which was a news-driven or momentum-driven intraday trade, and then ALGN, which was like breakout trade to the upside, standard, type of position that I look for. So both good positions. Navaris 100%er, 240% on ALGN, and we'll see what they do. If they work swing-wise, great. If not, so be it. So anyways, guys, that's just a quick little review for you. Hope you guys enjoyed it. There's gonna be more coming your way, and thanks for watching.